So, Mark, why is there a sudden increase in pressure on schemes to consider the impacts of ESG?
Thanks, Mark. Well, there's no doubt there's considerable pressure on DC schemes to consider environmental, social, and governance ESG risks and what the impact is on long-term return. And I think part of the reason for that is a change in policy and regulation on behalf of the government as it looks to really honour some of these crucial issues on ESG. Now, we know climate change is a massive issue for us all. We also know the government has actually dedicated and said it will look to meet that carbon neutral by 2050. And that type of issue, along with some of the aims and obligations from the international accords, like the Paris Climate Agreement and the United Nations Sustainable Development Goals, these are some of the critical issues the government is facing. But this isn't all about governments. Clearly, the individual member is critical to this as well. And the bottom line is individual members' preferences are changing. Clearly, they still want good financial returns. But when we've done some analysis, we estimate around 70% of members want to make sure they're not doing harm with their monies. But ideally, they also want to do good in terms of people and the planet. And we're seeing different uptake from different schemes. You know, all schemes with trustees have to put in their statement of investment principles what their ESG policy is. Others have had a good uptake, but then some, I think, are concerned about the fiduciary risk. You know, what if I invest in all ESG type products and the outcome for the member isn't optimal? But the reality is, I think there's pressures on all sides here. The risks are such they're going to drive returns going forward. So I think the option to do nothing just isn't there at the moment.
And what can the asset management industry do to encourage the further adoption of ESG principles?
I think the asset management industry is critical in this, Mark. I think probably two broad areas. One is for active managers to make sure that ESG is integrated into the investment process. And the other big area, I think, is making sure that members have the right product for what they want to do from an ESG perspective. And thinking of that active management bit, we as an asset manager, we believe ESG has been a part of our DNA for a long time, and we've embedded this in our investment process. And the number of ways we've done that is integration in the research process. This is a very backward-looking type approach where we're taking financial information, making sure all the ESG considerations are taken care of when we're looking at the business risks and business opportunities. Now, second part is more forward-looking. It's very much about engagement. It's going out and asking companies, what are you doing from an ESG perspective going forward? And part of that due diligence might actually mean that we give companies some development, some milestones to see them move towards what we would see as best practice. And the final step of that process is really about exclusion. Setting what is the investment universe that ultimately the client wants to make, speak to the client, see their preferences in terms of industries, companies. Do they want to exclude tobacco companies, for instance? That would be something we'd look at, and then potentially overlay with some of our minimum ESG criteria. But the second group then is more about product, and product spans a lot of things. One, it can have products with full integration of ESG, or it might be more thematic and impact investing. So things that give positive social or environmental impact. And we're already starting to see quite a lot of schemes using sustainable index as their core holding. These types of funds can be used in core asset classes. Really, it's about proactively tilting a portfolio towards sustainable type companies, companies that are dealing with ESG in an appropriate way and avoiding those unsustainable industry. But the thematic ones, impact investing, we think that's more likely to be a sort of satellite holding, less of a core holding, but it means individual members who have preferences can then move towards their own targeted return. And maybe finally, a lot of talk about illiquidity, private markets. We want to make sure that we've got the right DC-friendly solutions, giving people the ability to invest in renewables, infrastructure, and the likes going forward.
So what conversations are asset owners and fund selectors having with their managers when it comes to ESG?
Well, there's no doubt asset owners and fund selectors are wanting to better understand going forward how asset managers are making their investment decisions and what factors are driving that decision making. I think it's also fair to say that they're trying to understand and measure the impact on their portfolio. So at Aberdeen Standard Investment, that's actually impacting us in a number of ways. From a pure asset management perspective, we're definitely seeing we clearly have a broad palette of asset classes and funds and investment styles available to investors. And what we're seeing is that people in RFPs almost always, if not always, will have a question around ESG and sustainability and stewardships and the like. So this is no longer a nice to have. This is absolutely an essential part of asset management. We've also seen where things like solutions, OCIO advisory type mandates, it's really interesting when you look at the spectrum of clients out there in terms of sophistication and adoptions of ESG. From one end of the spectrum, we're seeing investors really haven't changed their language on this subject at all and really taking it as a tick box exercise, really trying to make sure they do enough, but that's all they're doing. Whereas at the other end of the spectrum, there are definitely some groups of clients that are setting their investment philosophy according to ESG, and that's driving their investment approach and driving their investment decisions. And finally, we also have multi-manager type products. These are where we're investing in other managers, and clearly, therefore, we're very keen to see what they're doing from an ESG perspective. And from an investor perspective, the thing we look for is not just what I talked about in terms of ESG, integration and stewardship, but from a business perspective, are they actually practicing what they preach? You know, it's all very well having a good ESG integration part of your process for your products, but we would take quite a dim view, as with other investors, of a company that's not living that out in practice.
So finally, what could DC schemes be doing to better integrate ESG considerations into things like their default funds and member-selected investment offerings?
Well, I think replacing or adding ESG strategies as part of that default, I think, is a really big step forward. But to truly integrate ESG into that strategic asset allocation and embed it in the default, we think is really the biggest step that could be made. I mean, fundamentally, when we think about one of the biggest challenges out there is really how do you model going forward what's going to happen to long-term returns? And it's really uncertain what's going to happen in terms of climate policy. And our teams have done a lot of work looking at things like the carbon footprint of existing indices, also looking at climate scenario analysis to really look at what the impact going forward of policy will be on long-term returns. And what that analysis tells us is that ESG factors are going to be some of the most significant going forward. So we believe the strategic asset allocation should embed ESG so that really the risk-adjusted returns members get are at their optimal level. So going forward, we would recommend really looking at ESG from a top-down asset allocation perspective. Also, I said earlier, really you want a broad palette of strategies available to members in ESG strategies, thematic strategies, like I said, that will allow members to have the optimal outcome. And the new normal, if you like, I think will involve strategic asset allocation with ESG embedded within it. And that will be driven by member engagement and by members. Hey, we've all seen the TV, David Attenborough's type programs about a life on this planet. That's going to be influencing members. And I think regulation will continue to move this way as well. So at Aberdeen Standard Investments, we're focused on making sure we have the right ESG type products, including sustainable type index funds, to help members along that retirement journey, whether it's in accumulation, decumulation, or to and through retirement.
We have to leave it there. Mark Foster, thank you for joining us.
Thanks.